1. In-depth analysis of the event background. The large-scale military parade to be held in China on September 3, 2025 is not simply a display of military equipment, but a comprehensive business card of the country's comprehensive strength. From a military perspective, the weapons and equipment presented in the parade, such as new fighter jets, missile systems, unmanned combat platforms, etc., directly reflect the latest progress of China's national defense modernization, including the technological maturity, localization rate, and systematic combat capabilities of the equipment. These displays not only demonstrate confidence in China's national defense capabilities, but also convey China's firm stance in safeguarding national sovereignty, security, and development interests to the international community. From a national strategic perspective, military parades are a direct reflection of a country's medium to long-term development strategy. The current international landscape is undergoing profound adjustments, and strategic competition among major powers is becoming increasingly fierce. Through military parades, China conveys to the world its principles of fairness, justice, and win-win cooperation in global governance, while also demonstrating its responsibility and commitment in addressing global challenges such as regional security and stability, non-traditional security threats, and more. In terms of economic strength, the military parade is backed by strong economic support. The research and development, production, and deployment of advanced military equipment require significant capital investment, a well-established industrial system, and a high-quality talent pool. China's ability to hold such a large-scale military parade indirectly confirms the resilience and vitality of its economy, especially its industrial strength in high-end manufacturing, new materials, information technology, and other fields. These industries not only provide guarantees for national defense construction, but also promote high-quality development of the national economy. From the perspective of technological development, the military equipment displayed in military parades often integrates numerous cutting-edge technological achievements, such as artificial intelligence, big data, cloud computing, quantum communication, advanced sensors, etc. These technological achievements are not only applied in the military field, but can also be transformed into the civilian field through the military-civilian integration strategy, promoting the technological upgrading and innovative development of related industries and forming new economic growth points. For the global capital market, this military parade holds significant importance that cannot be ignored. In the context of globalization, the economies and financial markets of various countries are interconnected. As the world's second-largest economy, any major strategic measures and strength displays by China will have an impact on the risk appetite, asset allocation direction, and industrial pattern of global capital. Global investors will view this military parade as a crucial window to observe China's future strategic direction, industrial development priorities, and changes in the international geopolitical landscape, and adjust their investment strategies accordingly. 2. Deep analysis of macro signals and market interpretation. 1. Detailed explanation of geopolitical impacts. 1. Impact on U.S. policy making. The progress of China's defense modernization and technological autonomy demonstrated during the military parade will undoubtedly intensify U.S. policymakers' attention to the strategic competition between China and the United States. For a long time, the United States has regarded China as its main strategic competitor, and the improvement of China's defense strength and breakthroughs in key technological fields may challenge its global strategic advantage as perceived by U.S. policymakers. In this context, the United States may further adjust its policy towards China and take more targeted measures in military technology, trade, and other fields, such as strengthening military deployment in the Asia-Pacific region and promoting the construction of an alliance system to curb China's expansion of influence. 2. Short-term impact on U.S. stocks and international market risk aversion. From the short-term performance of U.S. stocks, the overall impact is relatively limited. The U.S. stock market has strong maturity and resilience, and its trend is mainly dominated by factors such as domestic economic data, corporate profitability, and monetary policy. However, there may be a slight increase in risk aversion in the international market. On the one hand, the intensification of strategic competition between China and the United States may trigger market concerns about the escalation of global geopolitical risks, and investors may tend to shift their funds to traditional safe haven assets to avoid potential risks. On the other hand, market expectations of possible policy frictions and trade tensions between China and the United States will also increase market uncertainty, further boosting risk aversion. 3. Support for safe haven assets. Driven by rising safe haven sentiment, the US dollar index, gold, and US Treasury yields may be supported. As the main global reserve currency, the US dollar usually becomes a safe haven for investors when geopolitical risks intensify, and increased demand will drive the US dollar index higher. Gold has dual attributes of safe haven and anti-inflation. In the face of increasing geopolitical uncertainty and decreasing market risk appetite, the investment demand for gold will rise, thereby driving up the price of gold. As a low-risk asset, US Treasury bonds also attract a large influx of safe haven funds, leading to an increase in US Treasury bond prices and a decrease in yields. Note: US Treasury bond prices have a reverse relationship with yields. 2. In-depth interpretation of the logic of fiscal and defense expenditures. 1. Impact on US defense budget expectations. The enhanced defense capabilities demonstrated by China's military parade, as well as the potential trend of increased defense investment, will strengthen the expectation of the U.S. continuing to maintain a high defense budget in the future. In the view of US policymakers, in order to cope with China's rapid development in the military field and maintain the U.S. military advantage globally, it is necessary to increase defense investment. This expectation will affect the U.S. government's budget planning, and in the future, the U.S. defense budget may further increase on the existing basis to support the research and development, procurement, upgrading of military equipment, as well as the training and deployment of military personnel. 2. Lessons from historical experience for US military-industrial enterprises. Looking back at history, during periods of strategic competition, the United States usually significantly increases military spending. For example, during the Cold War, in order to engage in an arms race with the Soviet Union, the United States invested a large amount of military funds in military research and equipment production, which promoted the rapid development of U.S. military-industrial enterprises at that time. From the current situation, the strategic competition between China and the United States may continue for a long time, which brings long-term development opportunities for us military-industrial enterprises. With the increase of the U.S. defense budget, military enterprises will receive more orders, and their performance growth has strong certainty. At the same time, the R&D investment of military enterprises will also increase accordingly, promoting their technological innovation and product upgrading, further enhancing their competitiveness and profitability. 3. In-depth analysis of the impact of industries and sectors. 1. Military industry sector. Comprehensive analysis of long-term benefit logic. 1. Expected orders from key enterprises: Lockheed Martin Corporation (LMENT), Raytheon Technologies (RTX), Northrop Grumman Corporation (NOC). Waiting for leading military enterprises in the U.S. stock market. It is expected to receive more order support in the future from a product perspective. Lockheed Martin Corporation has strong competitiveness in areas such as fighter jets and missile defense systems, with the increasing emphasis on air superiority and missile defense capabilities in the United States. The company may receive more fighter jet purchase orders and missile defense system-related project contracts. Raytheon Technologies is a technology leader in aviation engines, radar systems, precision-guided weapons, and other fields. The increasing demand for advanced aviation equipment and precision strike weapons from the U.S. military will bring more business opportunities to the company. Northrop Grumman Corporation has advantages in strategic deterrence weapons, unmanned aerial vehicle systems, space equipment, and other fields. With the intensification of major power strategic competition and the trend towards space militarization, the company's orders in related fields are expected to increase significantly. 2. The logic of national defense is an anti-cyclical asset is strengthened. In the context of macroeconomic uncertainty and economic cycle fluctuations, national defense spending usually has strong stability. regardless of whether the economy is in a period of prosperity or recession. The country will maintain a certain scale of defense investment to safeguard national security and strategic interests, which makes the military industry sector have obvious anti-cyclical properties. This Chinese military parade further strengthens this logic, and global investors will have a better understanding of the defensive value of the military industry sector during economic downturns. In the context of slowing economic growth and increased market volatility, investors will increase their allocation to the military industry sector to reduce the overall risk of their investment portfolio, thereby driving up the valuation of the military industry sector and stabilizing stock prices. 2. Technology and semiconductors, a deep analysis of competition and risk coexistence. 1. The risk of US technology export controls intensifies. If China demonstrates significant progress in areas such as chips, artificial intelligence, and satellite communications during the military parade, it may trigger high vigilance from the US government. The United States has always been concerned that China's rise in key technological fields may threaten its technological hegemony and national security. So it may further strengthen its control over China's technology exports. Specifically, the United States may expand the list of technology products subject to export restrictions to China, such as advanced process chips, artificial intelligence chips, semiconductor manufacturing equipment, satellite communication-related technologies and products, etc. At the same time, there may be strengthened regulation on cooperation between American companies and Chinese technology companies, restricting American companies from transferring technology, providing services, or investing in Chinese technology companies. 2. Dual impact policy risk shock on US tech giants, NVIDIA Corporation NVDA, Advanced Micro Devices, Inc. AMD, Qualcomm Incorporated Comust tech giants will face direct policy risks. These companies have a significant business share in the Chinese market, especially in chip sales. Strengthening technology export controls in the United States will directly limit the scope and scale of products exported by these companies to China, leading to a decline in their revenue in the Chinese market and ultimately affecting their overall profitability. In addition, policy uncertainty can also affect the long-term strategic planning and investment decisions of these enterprises, increasing their operational risks. Strengthening the logic of independent innovation theme allocation despite facing policy risks. The United States' strengthening of technology export controls to China has also, to some extent, strengthened the long-term allocation logic of US stock investors towards the theme of independent innovation. To reduce dependence on external markets and technology, the US government may increase its support for local technology companies, such as providing research and development subsidies, tax incentives, government procurement, etc., encouraging companies to engage in independent innovation and technological breakthroughs in key technology fields such as chips, artificial intelligence, and quantum computing. At the same time, the market will also pay more attention to technology companies that have advantages in independent innovation, believing that these companies can occupy a favorable position in future technological competition and have long-term investment value. Therefore, investors may increase their allocation to these US stock technology companies with independent innovation capabilities, driving up the stock prices of related companies. 3. Energy and commodities, a detailed interpretation of strategic value enhancement. 1. The driving factors for the enhancement of strategic value. China's military parade emphasizes energy security and supply chain security, which will trigger a global capital re-examination of the strategic value of energy and commodities. In the current complex international geopolitical landscape, energy is an important strategic resource for national economic development and defense construction, and its supply security is directly related to the country's economic stability and national security. At the same time, with the deep integration of global industrial and supply chain security has become a focus of attention for countries. As an important raw material in the industrial chain, the supply stability and price fluctuations of bulk commodities have a significant impact on the normal operation of the industrial chain. As a major global consumer of energy and commodities, China's emphasis on energy security and supply chain security will drive global capital to pay more attention to the strategic value of energy and commodities, thereby affecting the supply and demand relationship and price trends of related markets. 2. Impact on U.S. stock-related sectors. Energy sector. The U.S. stock energy sector is expected to receive additional valuation support. On the one hand, the increasing attention of global capital to the strategic value of energy will promote the improvement of the financing environment for energy enterprises, making it easier for them to obtain funds for oil and gas exploration and development, new energy project construction, etc. On the other hand, the expectation of rising energy prices will also enhance the profitability of energy companies, thereby driving up their stock prices. Specifically, traditional energy companies such as ExxonMobil and Chevron will see an increase in their exploration and development profits as oil and gas prices rise. New energy companies such as Tesla, with a presence in the energy sector, and First Solar have broad development prospects and will be favored by investors in the context of global energy transition and increasing demand for clean energy. Commodity-related sectors. U.S. stock sectors related to commodities, such as the mining sector involving the extraction of rare earth, copper, iron, and other mineral resources, and the agricultural sector involving the production of agricultural products such as grain, will also benefit. Rare earth, as an important strategic mineral resource, has a wide range of applications in new energy, high-end manufacturing, military equipment, and other fields. Its strategic value will be further highlighted, and the valuation of related mining enterprises is expected to increase. Meanwhile, as an important component of supply chain security, food security will also receive attention from global capital, and related enterprises in the agricultural sector may receive more investment support, driving their stock prices up. 4. Investor strategy recommendations for in-depth expansion. 1. Short-term strategy. Focus on defense. Accurately grasp the volatility of safe haven assets in the short term, usually 1-3 months. Due to the uncertainty caused by rising geopolitical risks in the market, investors should adopt a defensive investment strategy, focusing on the price fluctuations of safe haven assets such as the US dollar, gold, and US bonds, and allocate relevant assets reasonably to avoid risks. 1. U.S. investors can hedge against exchange rate fluctuations and asset depreciation risks caused by geopolitical risks by allocating USD-denominated assets such as USD cash, USD deposits, USD ETFs, etc. In situations where risk aversion is on the rise, the US dollar usually appreciates, and holding US dollar assets can, to some extent, protect the value of the investment portfolio. 2. Gold. Gold is a traditional safe haven asset, and investors can allocate gold assets through purchasing physical gold, gold ETFs such as SPDR gold shares, gold futures, and other methods. In an environment of increasing geopolitical uncertainty, rising inflation expectations, and decreasing market risk appetite, gold prices often rise, providing effective risk hedging for investment portfolios. 3. U.S. Treasuries. U.S. Treasuries, especially short-term ones, have the characteristics of low risk and stable returns, making them an important choice for safe haven funds. Investors can allocate US bond assets by purchasing US bond funds or directly buying US bonds. When the market's risk aversion sentiment heats up, funds will flow into the US Treasury market, driving up US Treasury prices, and investors can obtain capital gains and fixed interest income. At the same time, investors should closely monitor the policy dynamics between China and the United States, the progress of geopolitical events, and the economic data and monetary policy changes of major economies around the world, and adjust the allocation ratio of safe haven assets in a timely manner. For example, if there are signs of easing between China and the United States and risk aversion decreases, the allocation of safe haven assets should be appropriately reduced. If geopolitical risks escalate further, the allocation of safe haven assets should be increased. 2. Mid-term strategy. Focus on military industry, lay out stable growth and risk-resistant sectors in the medium term, usually referring to 3-12 months, with the clear expectation of an increase in the U.S. defense budget and the gradual landing of orders from military enterprises. The U.S. military industry sector will have the characteristics of steady growth and risk resistance, which is a key direction for investors to focus on. 1. Sector selection. Investors should focus on leading enterprises in the military industry sector and advantageous enterprises in segmented fields. Leading enterprises such as Lockheed Martin Corporation, Raytheon Technologies, Northrop Grumman Corporation having strong technical strength, market competitiveness, and order acquisition ability, one can occupy a larger share in industry growth. In terms of segmented fields, attention can be paid to areas with high technological barriers and growth potential, such as drones, missile defense systems, space equipment, and advanced aviation engines. Relevant enterprises are expected to receive more policy support and market demand in the future. 2. Investment method. Investors can lay out the military industry sector by directly purchasing stocks of military enterprises or investing in military-themed ETFs such as iShares US Aerospace and Defense ETF. Directly purchasing stocks requires investors to conduct in-depth research on the fundamentals, industry prospects, and competitive landscape of the enterprise, and choose enterprises with investment value. Investing in military-themed ETFs can achieve diversified investment in the entire military sector, reduce the risk of individual enterprises, and also share the overall growth benefits of the sector. 3. Risk control. Although the military industry sector has the characteristics of steady growth and risk resistance, there are still certain risks, such as policy change risks, such as defense budget adjustments, military procurement policy changes, etc., order delivery delay risks, and technology research and development failure risks. Investors should reasonably control their positions and avoid excessive concentration of investment when investing in the military industry sector. At the same time, closely monitor industry trends and corporate announcements to promptly identify and respond to potential risks. 3. Long-term strategy. Beware of risks and explore structural opportunities in the long term, usually referring to more than 1 year. The technological competition between China and the United States will be a continuous process, which will bring many policy uncertainties and also give rise to potential structural opportunities in fields such as energy security and materials technology. Investors need to be vigilant about risks while actively exploring these opportunities. 1. Risk vigilance. The policy uncertainty brought about by the technological competition between China and the United States is a key risk that needs to be focused on in long-term investment. The United States may continue to strengthen its crackdown on Chinese technology companies, and may also introduce relevant policies to restrict cooperation between American technology companies and China, which will have an impact on the performance and development of U.S. stock technology companies. Investors should closely monitor changes in U.S. technology policies towards China, analyze their impact on related companies, and avoid investing in technology companies that are heavily influenced by policies and have a high dependence on the Chinese market. In addition, attention should be paid to factors such as changes in the competitive landscape of the global technology industry and the speed of technological innovation. In order to avoid investing in enterprises that are technologically backward and lack core competitiveness. 2. Opportunities to explore the field of energy security. With the increasing global emphasis on energy security and the promotion of global energy transformation, there will be broad development space in the efficient development and utilization of new energy such as solar energy, wind energy, hydro energy, hydrogen energy, etc., traditional energy, energy storage technology, energy transportation, and pipeline construction. Investors can pay attention to companies in the U.S. stock market that have technological advantages and market competitiveness in these areas, such as new energy generation companies, energy storage equipment manufacturers, energy technology service providers, etc. In the field of materials technology is the foundation that supports the development of many industries and has important applications in defense, aerospace, new energy, electronic information, biomedicine, and other fields. With the continuous advancement of technology and the rapid development of emerging industries, the demand for high-performance, multifunctional, and environmentally friendly materials will continue to increase. Investors can pay attention to companies in the U.S. stock market that have research and development advantages and industrialization capabilities in advanced composite materials, special metal materials, polymer materials, nanomaterials, and other fields. These companies are expected to gain advantages in future market competition and achieve rapid growth in performance. 5. Conclusion. The 2025 Chinese military parade, as an external manifestation of national strategy and economic direction, has a multidimensional and profound impact on the U.S. stock market, with limited short-term impact but far-reaching long-term effects. In the short term, the increase in geopolitical risks caused by the military parade will lead to a slight rise in international market risk aversion, driving up the prices of safe haven assets such as the US dollar, gold, and US bonds. The impact on the overall trend of the US stock market is limited, but it may have a certain short-term impact on some sectors with high correlation to the Chinese market. In the medium to long term, the military parade has strengthened the expectation of the United States maintaining a high defense budget, bringing long-term development opportunities for the U.S. military industry sector. The military industry sector is expected to continue to outperform the market and become a high-quality investment target in the U.S. stock market. At the same time, the intensification of technology competition between China and the United States has put significant policy risks and competitive pressure on US technology stocks, especially those technology companies that are highly dependent on the Chinese market and whose core technologies are easily restricted by US policies. Their performance, growth, and valuation improvement will be constrained. On the other hand, it also strengthens the long-term allocation logic of US stock investors towards the theme of independent innovation. And technology companies with independent innovation capabilities still have good development prospects. In addition, the emphasis on energy security and supply chain security in the military parade has once again strengthened the strategic value of energy and commodities, and related sectors are expected to receive more attention and investment in the U.S. stock market, showing a good growth trend. For global capital, this military parade is an important reference for adjusting investment strategies. In the future investment process, global capital needs to closely monitor the situation of strategic competition between China and the United States, changes in policies of various countries, and industry development trends, find new allocation logic in complex market environments, balance risk and return, and achieve stable growth of investment portfolios. At the same time, global capital should also recognize that although there is competition between China and the United States, there is still room and demand for cooperation between the two countries in many fields in the context of global economic integration. Excessive confrontation and friction are not conducive to the stable development of the global economy and financial markets. Therefore, it should be advocated to resolve differences through dialogue and cooperation, and jointly promote the prosperity and progress of the global economy.